In today's video, I'm going to teach you how to use Finviz Fundamental Filters. We'll walk through how to set up a clean, effective screen so you can quickly narrow thousands of stocks down to a focused, research-ready list. By the end, you'll know what each key filter does and how to apply it with confidence. First, open your browser and go to finviz.com/screener.dihx. You'll land on the Stock Screener page. At the top of the filter panel, switch to the Fundamental tab. This view focuses on financial metrics rather than technical indicators, perfect for investors who care about valuation, growth, profitability, and balance sheet strength. Start with valuation. Set filters like PE, PEG, and price to book. PE compares a company's price to its earnings. Lower values can indicate a cheaper stock, though always consider the industry norm. PEG adjusts valuation for expected growth. Values around 1 are often considered fairly valued, while lower can suggest undervaluation relative to growth. Price to book compares market value to net assets. A low PB might signal value, but it can also flag distressed businesses, so use it alongside other metrics. Next, add growth filters. EPS growth, whether quarterly or projected over the next 5 years, points to improving profitability. Sales growth highlights top-line momentum and can be especially helpful when earnings are volatile. Using both together helps balance expectations between what's happening now and what's forecast ahead. Layer in profitability metrics to focus on quality. Return on equity shows how efficiently a company turns shareholder capital into profit. Higher and consistently positive ROE is a good sign. Net profit margin tells you how much of each dollar of revenue becomes profit. Stronger margins often reflect competitive advantages or good cost control. Check financial health with leverage and liquidity ratios. Debt to equity reveals how much the company relies on borrowing. Lower is generally safer, but norms vary by sector. The current ratio indicates if short-term assets can cover short-term liabilities, and the quick ratio is a stricter version that excludes inventory. Healthy levels here reduce the risk of cash crunches. If income is a priority, optionally filter by dividend yield or related payout ratios. A higher yield is attractive, but make sure it appears sustainable relative to earnings and cash flow. As you apply filters, the results table updates automatically with stocks that meet your criteria. If your list is too small, consider easing a filter. If it's too large, tighten one. Finally, click any ticker in the results to open its detail page and review charts, news, and fundamentals to validate your screen before moving forward with deeper research.